So Mike, it's all yours. Mike, you're still on mute.
Okay, thank you, Steve. Everybody, can you hear me? Yes.
Yes.
I just want to preface everything by thanking, I'm a certified public accountant for the last 3 decades or more. Thank you, Elaine. That was an excellent presentation. And if anything, a 10-minute trailer for a presentation we should not miss on Monday at 7 p.m.
Agreed.
Okay, good afternoon, everybody. Your Eminence, Metropolitan Savas, Chancellor, Father George, Father Libanos, Archons, Steve, and Steve, all of you members of the church, thank you for having me. I'm Michael Passodelis. I'm a member of the Metropolis Finance Committee for the last 5 years, and also our treasurer at Holy Trinity Church in Pittsburgh for the last 5 years. And if you have any questions, please speak up or just direct them through Father George. The information is going to be a primer, perhaps even a refresher or reminder to those who have been on parish council as a treasurer or are familiar with nonprofit accounting. I am not expert in nonprofit accounting. I do 100% tax. But I did want to speak about some broad brush information that Archon Poulos brought up earlier. And in general, some of you out there are accounting professionals, so it might be somewhat basic, but those who are not, or those who are new to the position of treasurer, this is just kind of an introduction to some of the things that we want to focus on and encourage people to be aware of as you work within your parishes, and also when you report to the Metropolis by May 15th, your annual information. Can you share with us, Father, the PDF that I had sent to you at one time earlier? Okay, very good. This is generally what we're going to be speaking towards on the financial statements of a nonprofit organization, which of course the church is, and there's so many different nonprofits. There's 2 types of reporting, external and internal. External, which is on the accrual basis and conforms with United States generally accepted accounting principles as promulgated by the Financial Accounting Standards Board, is something that we all may be aware of. Some of our parishes do have externally prepared statements for various reasons, including loan covenants, etc. Internally prepared financial information, and as presented each month at our treasurer, by our treasurers at our parish council meetings, we're going to speak about that too, and that may or may not be on the cash basis. The Metropolis reports on the accrual basis. I believe that we all are able to do either or. If you're using certain softwares, you could select that basis of accounting. Both generally have the same forms of reporting. And we're going to look at 3 statements that are typically provided within a nonprofit and within the churches. One is the statement of financial position, which is presenting assets, liabilities, and net assets. Now, this is called a balance sheet in the world of business accounting, but we call this the statement of financial position. The second of the 3 statements is the statement of activities. This presents revenues and support, program and administrative expenses, and changes in net assets. That's a word that some of you may be familiar with as net income or loss, but we call it change in net assets. The last statement, which some of us may prepare each month, it's an important statement as well, is the statement of cash flows, which presents operating, investing, and financing activities and changes in cash. If you could scroll down, Father, to the next page. Fund accounting. This is necessary when we're trying to maintain record keeping and accountability by individual funds, which utilize separate general ledgers and separate financial statements. The statements we're going to look at today, which are similar to what Archon Poulos provided, are consolidated. So we aren't going to delve into the separate accounting by funds, but each separate fund, whether it's, for example, unrestricted, temporarily restricted, etc., whether it's donor restricted, festival funds, cemetery funds. Each of them should have their own set of books, and each of them should be looked at as a separate form of, I use the word business here because that is the church, the business of the church. So we can evaluate the church's festival profitability or needs within funds, including cemeteries, other ministries, etc. Now we're going to go through some examples. If you could page down to the next statement, next page, Father. This is an externally prepared report. The statement of financial position prepared on a comparative basis showing year-to-year comparisons of assets, liabilities, and net assets. In this statement, which this is available, as the Chancellor spoke to on the website for many years back, and this is an audited statement. So this was prepared by Meyer Dussel, the firm that does the audit for the metropolis. And it's not the most current period, obviously, because 2020 is still preliminary. But what we're showing here is assets that include cash and other similar nomenclature to a typical business balance sheet. This is a statement of financial position, but the assets are similar and can be in many ways, as well as the liabilities, as you see under the liabilities, accounts payable, accrued expenses, and vehicle loans. The section called net assets is somewhat unique in nomenclature and terminology. We use the word net assets, not equity. The net assets can be separated or bifurcated by donor restricted or without donor restriction. The withouts, which you see here, are undesignated, which is money that can be used at the discretion of the church through the parish council. And the board designated might have some restriction, but not donor restrictions. And those are shown separate from funds that are restricted by donors. As you can see here, there's a time purpose restriction by a donor or a perpetual in nature, which means it's an indefinite restriction that goes on perpetually. And once again, this is unique because it's not an equity section, it's net assets. If you could page down, Father, to the next statement. This is called a statement of activities. Within the business world, it's called the income statement, but here we're showing categories of operating revenue and support, operating expenses, other revenues and expenses, and in the bottom, the change in net assets. That's the equivalent of net income or loss, the change in net assets. So we're using these forms of terminology here in the churches, and we want to conform with the parishes too. Earlier, as we saw on the metropolis internal statements, we aren't in complete conformity, and we're going to be working towards that, relabeling and revising some of the labels within the accounting software. And if you could page down, Father, to the next statement. This is the statement of cash flows. We don't typically see this in our parish council meetings. It may not necessarily be prepared month to month because it's somewhat complicated. On an annual basis, as you can see, it's identifying operations, investing, and financing activities. It's very similar, if not identical, to a business prepared statement of cash flows. This presents where our funds are coming from and how they're used. It's also showing if you have loans, how principal was paid, and a supplemental disclosure in the bottom of interest paid. If you could move on to the next statement, Father. Okay, this is an internally prepared document that Archon Poulos went over a moment ago for the current year, 2020 versus 2019. I used this report because 2020 is preliminary, and these numbers are relatively final here. And as you can see in this statement, what we're using on the accrual basis, it doesn't say it on the top, but the metropolis uses the accrual basis of accounting, and they present in this statement the assets, including all the separate bank accounts. Each one of them may be restricted or subject to a restriction. And so they're shown separately because this is consolidated, like I said. So when you go down throughout the many different financial statements and general ledgers within the church, you'll find that all of them have their own bank account and all of them have their own financial statements to account for what's happened with their cash. But here on a consolidated basis, you can see 10 separate bank accounts, which sometimes with a nonprofit is very obvious. Businesses sometimes just show one number called cash and cash equivalents. Here you can see accounts receivable. You can see current assets, which here we have investment assets within the Raymond James accounts, and we also have restricted funds at Wells Fargo within restricted categories by donor, Christolidis and Mandalakis, which are donor restricted funds. Also down below, you're looking at different assets and separation of them, including St. Gregory Palamas and Mount Tabor properties. They're not just combined into one number called building and property, so that we can, in this case, I think as it's mentioned earlier, one of them will be transferred to the monastery and will leave our balance sheet. This, Father, you can continue to the next statement. This is a statement of financial position, which in the business world is the balance sheet. This statement presents liabilities and net assets, although you see the word equity here, that's going to be changing soon. And we're looking at liabilities in general, and they're very similar to businesses. These include various credit card balances and payroll tax accruals. So this is these presentations look very similar to what we see in business balance sheets. Here in our statement of financial position, we also see loan information. And on the bottom where you see the word equity, that will be net assets, just as the sub accounts show on all four as net assets. The undesignated, the board designated, those are without donor restriction. The second two, temporary restricted and permanently restricted, those are with donor restrictions. And of course, those are perpetual with respect to the permanently restricted. The total liabilities and net assets, of course, equal the total assets. And the nomenclature and terminology in that respect will be updated. If you could go to the next statement, Father. This is a comparison, as we spoke about earlier, a comparison of year to year, but this is comparison of year actual to budget. And I think that at every one of our parish council meetings, we should have both. We should have actual to budget, and we should try to also compare year to year within the monthly reporting process. This statement here is the statement of activities. Although the top says activity, it actually should be plural, and we're in the process of changing that too. And the first line item there, which is described as ordinary income and expense, really that should say operating revenues and support. So, you know, it's a slow and gradual process, but we'll be working towards that. And we just encourage all parishes to try and do the same and show these nomenclatures and terminologies. In the middle, you can see restricted and earmarked revenue and support. As Archon Poulos mentioned, the new Metropolis Center is going to be removed to account 33025 down to other because it's not from operations. And as we look in this statement too, we can see categories where there are fundraisers, including the banquet, basketball, and camp. Now we're showing in this statement gross revenue numbers, gross support numbers. We're actually, it's preferred and recommended that when you present this statement, you actually within those subcategories show the relevant costs so that we're netting them here in these categories for fundraising: banquets, basketball, camp, festival. This is probably the only time that you would be able to net expenses, because we do want to see gross income and gross expenses. But when we look at a line item like for the banquet or for camp, and I use the 2019 because there is material information in there, or for basketball, don't think that we made $310,000 from camp. We did not. It's, if not all of that's been spoken for, but sometimes it's misleading when the gross numbers aren't necessarily identified with the expenses to a net number. If you can turn to the next page, Father. This is just a continuation of our statement of activities. The word total income should be total revenues and support, and the gross profit is non-existent So we would typically go right to the expenses, and they're very similar, so we don't really need to go through them all. Archon Poulos went through them for the current year. So you can go to the next page, Father. And on this section here, at the very bottom where you see event and fundraiser expenses, for instance, the banquet, that's where I was speaking to earlier, that we want those to be closer connected to the gross revenues, so that when presented to users of the financial statements, that they'll quickly be able to see the net number, and instead of the separation of the gross numbers, which are sometimes hard to locate within a 3 or 4 page document. And you could go to the final page, Father, which looking here, of course, again, we see camping and basketball, which those are the expenses associated with that. And in the middle where it says total expenses, that right beneath that, it says net ordinary income. That should be net change from operations, not net change in assets, but net change in assets from operations. And then you get into the other category where you'll see non-operating sources and uses of income and expenses. And then if you can turn to the next page and the last page of this financial statement, you'll see at the very bottom where it says total or net income, that should be change in net assets, because we don't have the word net income loss on this statement. And just keep in mind, we're looking at consolidated statements, so fund accounting is not evident here, and the separate general ledgers and financial statements, which we aren't going to review in the limited time we have. And I just wanted to go over here this best practices, which is commonly we say best practices in anything that we do. But I think with respect to the church, we have to keep in mind some of the best practices and apply them at the parish council or the committee level, segregating duties, financial duties. And just by example, in our parish, I'm the treasurer, but I am not allowed to sign checks. And I don't think necessarily that should be the case. I do the reporting. I don't authorize the spending. So there's that separation of duty, which is unique in our church. Some churches have all executive committee members signing on the bank accounts. Our church, our treasurer does not sign checks. That's interesting, I'm sure, to some of you. Also, we have confidentiality and privacy of information. We have to keep in mind in best practices, that includes pledge or payroll information. It should always be under secure, passwords, or locked drawers. We want to implement and apply all policies and procedures recommended by the Archdiocese of the Metropolis and or outside and accounting firms, in which case some of you may have 2 firms, the external reporting like Meyer Dussel and internal Cipher, who helps with bookkeeping and internal accounting to mitigate fraud. So these policies are in place where 2 people have to count money together, 2 people have to sign the document, and in our church, 2 people have to get it in the car at 11:30 in the morning and drive to the bank and do a box at the bank at West Banco. So we go to the maximum to try to just, even if it's a $50 deposit, just to show going through the motions is very important. We want to make sure we do our annual budgets well in advance of the November and December meetings, which we're guilty of, to try and come up with those well in advance so that we can enter the new year with good information that's been thoroughly vetted out by our parish councils. We want multi-year plans and budgets for strategic planning and growth and realistic fundraising plans. And sometimes, with respect to the pandemic, that, the reality is that our fundraising goals might be blue sky and we need to rein those in. The second thing I want to mention is outsourcing your bookkeeping and payroll. I know we do both. We outsource our bookkeeping to an accounting firm, and we also outsource payroll. These are areas where compliance is very rigid, and especially in the payroll area, there's a lot of caveats and penalties associated with making a mistake. If necessary, you can engage external accounting professionals. Those would be people to come in and review, audit, or compile your financial statements for loan covenants or for other reasons as needed, and also if the metropolis requires it. It was thoroughly discussed earlier, our accounting softwares that we do use. I don't recommend any, but it was mentioned that QuickBooks is available, and PDS and some others that are used by the parishes. Make sure that you follow the guidelines within those specific to nonprofits. Also, the uniformity of chart of accounts is important. If you're able to conform with what's been provided by the metropolis, there are chart of accounts that are available for all the treasurers to view on the metropolis website. Same with the financial statements, to try and format and lean towards that, because conformity and uniformity of parish financial information within the metropolis is encouraged because it's all similar. We all have the same type of business. We don't have different businesses, and it makes the reporting easier of similar information, so we can help manage at the parish level and the metropolis level in the operating of the business of the church. And that is the end of my presentation, except I want to take a moment and mention something in addition to what Elaine spelled out. That would be regarding the SBA PPP loan that the parishes may have received, and they also may receive the second one. These are the points I want to make. Number one, these are liabilities, and they need to be on the statement of financial position until forgiven. Most of those loans probably were not forgiven at year end because the forgiveness process was delayed. So we are looking to see that on your balance, on your statement of financial position. It should not be in your statement of operating activities, because it's not considered support or other revenues until it's forgiven, which, even if it's guaranteed, we don't want to mislead anybody that we still have a liability, that someone has to go through the exercise of submitting the forgiveness. So no one overlooks that, and by accident, it doesn't get forgiven, which would be ridiculous. And I think that that's pretty much everything that I wanted to go over. In case anybody has a question, please speak up. Thank you for having me.
So for clarity's sake, you said once it's forgiven, it should be listed as a revenue, right?
That's correct, Father. Yes.
But until it's forgiven, it should be listed as a liability.
Yes, that's correct.
Okay.
Hey, Michael, this is John Lounces. I have a quick question for you. Since all the churches pretty much have the same categories, why don't we have a standardized format that everybody uses and a standardized accounting system, whether it's QuickBooks or PDS, and everybody's using the same thing with the same categories instead of making stuff up left and right, and then everybody's figuring out what they're doing? It's like the Wild West out there, the way it looks like to me. Why isn't there just one that everybody agrees on and we all just do the same thing?
Joanne, I think you hit the nail on the head. And the most frustrating thing is every June we get together and try to make sense of 50 parishes' statements. And, and inevitably when we go through them, there's so much disparity and it's difficult. They're not in conformity. Some of them are, but it would be very beneficial if people could use, as Father's showing here, the resources of the metropolis to try and either use the recommended software, and here's the standard chart of accounts. Thank you, Father, for showing this information right here. As you can see, John, that if we can follow that, and it takes time, it doesn't have to be implemented next month, but just work towards looking at those accounts and relabeling your own and trying to get your statements more in conformity. So those resources are out there. I encourage you to go to the website to try and identify some of those things that might be helpful to you. But I appreciate that's a good comment, good suggestion, John.
And we have over the years tried to persuade all our parishes to go to the PDS software. Again, PDS software is primarily a stewardship software to begin with, but then it does have the financial package that's called Ledger, but QuickBooks, and I believe there may be another accounting software that will integrate with it. But the main part is the uniform chart of accounts. If we can get everybody to utilize that, that would be a good first step in having a uniform accounting system or financial record keeping for all our parishes. So any other questions for Michael? Having heard none, thank